Jose Tormos, broadcasting to you here on our Analyst on Demand channel. I wanted to go ahead and do a short video here on this New Zealand US dollar short-term trade that we have found here in our European session to go ahead and take on as a bull position. We have 5 different bullish convergences as to why and take this trade. The majority of our trades are going to be at least 3 or more educated reasons as to why and take a trade opportunity. When we have more than three convergences, letting us know that the market is talking to us via sign language of the candlestick formations that it's going to move in a certain direction, we must listen, and more often than not, we will be positive and winning in our trades. We won't win every trade. There's no undefeated season in trading, but we will take on positions and be victorious on the majority of them by following the convergences rule, counting at least 3 or more convergences per trade. In this particular situation here, we are going to place a short-term trade in the direction of an up ABCD wave movement here. We've got a long-term down trend line currently breaking here, and we've got a counter trend line breaking. So we've got convergence number 1 for this short-term trade is first and foremost this counter trend line is broken. That's convergence number 1 of 5. A morning star formation has appeared. That's convergence 2 of 5. The market here is in the buy zone of our automated trend line. That's convergence 3 of 5. The field gauge has U-turned to the north, the stochastic RSI, as you can see down here. That is convergence number 4 of 5. And also we have, in this wave movement here, past resistance has become a floor support for this morning star, which is 5 different convergences or 5 different educated reasons why to take on this trade. So we've just entered the position at 80.75 to go long. And now the market here is at 80.76, so it's about 1 pip positive at the moment. May test the formation here 50% of the time. It may not. So 50% of the time it'll rally or retrace and test the candlestick formation. My stop loss is at 80.44 here, which is 10 pips below my morning star formation. And from my entry point of 80.75, you can see that by taking our trusty calculator, it's a nice short-term trade. 80.75 was our entry. We subtract that from the stop loss of 80.44. It's a 31 pip risk versus a 31 pip reward. So we're going after a 1-to-1 move for the candlestick formation here. So by adding 31 pips to our entry of 80.75, our limit is going to be at 81.06 for this short-term trade, and that is right here just shy of this third level of major resistance the market's going to take out as far as a bull point. So we have 81.06 as the limit, and that is for 31 pips to be achieved there on this particular candlestick formation setup, the sign language of the markets. So this is the New Zealand US dollar 60-minute time frame. This is FX MVP. We'll come back and take a look at what the market conditions did for us when this trade is up. Alright everyone, and good morning. This is FX MVP Jose Tormos broadcasting to you live just north here of Orlando, Florida in beautiful Lake Mary. Here on behalf of Market Traders Institute, we're going over the review here of the New Zealand US dollar short-term scalp trade off the 60-minute time frame that we took on. We had placed the trade here to go long off the morning star formation, as you've just seen previously on the entry video. Now that we're doing a video to close out the trade and show you the results are in, and the trade worked out magnificently according to our plan. We planned our trade, traded our plan, and the market went up within 8 hours and fulfilled our trade limit of 31 pips. Again, the reasons for the trade were that we had 5 different bullish convergences. For those of you that don't know what the word convergence means, it is the term convergence means 3 or more educated reasons why the market will move in the direction of our analysis, and we happen to find more than that. So the more convergences we use, the higher percentage of the trade, the more confidence you can take on trading these markets. Again, what we did was we bought this morning star formation right here at 80.75. We found a counter trendline break, which was 1 convergence, a morning star formation, 2 convergences. Past resistance here became a floor support as 3 convergences. The market was in the buy zone above my automated trend lines. That's 4 convergences. The market gave me a stochastic RSI field gauge U-turn. That's 5 convergences. And as we were drawing our Fibonacci A, B, C, D wave movements, we were also in an up A, B swing that after some sideways movement with this formation retraced with this long wick to the south at the 5-0 Fibonacci retracement, which actually should be 6 bullish convergences, therefore giving us our 31 pip move to the north. We completed the D extension, fulfilled our target, we've pulled back, and now, as simple as that opportunity was, what we need to do next would be to draw our next counter trend line across the highs of resistance here from the current market price and await another trading opportunity as it arises. So congratulations to those of you who did take on the trade. This has been a short video to close out the New Zealand US dollar 60-minute time frame. This is FX MVP. Join me each morning in the European session on the Man vs. Pip show. Enjoy the rest of your day. 31 pips, New Zealand 60.